You know how a lot of people treat the stock market like a giant slot machine? Buy here, sell there, chase the next big thing, and hope to hit the jackpot? Yeah, this is not that. Today, we're diving into some of the smartest, most practical investing wisdom ever written. Principles that have been around for over 70 years and are still helping people grow their wealth with less stress, less risk, and a lot more common sense. But here's the thing, this isn't going to be one of those stiff academic summaries. We're going to break it down in plain English, with real-life examples and simple, actionable lessons you can use right now. And if you enjoy learning smart ways to build your wealth without feeling like you need a PhD in finance, hit subscribe and tap that bell so you're the first to know when more videos like this drop. Stick around until the end, because I'm going to share one personal lesson from this book that completely changed how I invest and how I make everyday decisions. It's not flashy advice, but it's the one thing that's made the biggest difference for me. His timeless work was written by a man often called the father of value investing. He taught generations, including Warren Buffett, that investing isn't about guessing what's going to happen tomorrow. It's about buying things worth owning forever. His core belief: the market can be irrational in the short term, but in the long term, value wins. And if you know how to spot value, you can build wealth without losing sleep every time the headlines get scary. Be an investor, not a speculator. If you were buying a coffee shop, you wouldn't do it just because a friend says it's about to explode in value. You'd look at the customers, the quality of the coffee, the location. That's how you should approach stocks, like you're buying the whole business, not betting on a quick price move. Always have a margin of safety. When engineers design a bridge, they don't make it hold just the exact weight they expect. They overbuild it. In investing, that means never paying full price for what you think something is worth. If it's worth $100, you aim to buy at $70 or $80. That cushion is what keeps you safe when the market shakes. Control your emotions when the market panics. Markets are moody. Prices can swing wildly for no real reason. Most people panic and sell when they see red. But if you've done your homework and believe in the value, those drops are actually opportunities, like your favorite sneakers going on sale. Ignore the noise. There's always going to be breaking news, dramatic predictions, and expert hot takes. Most of it? Just noise. The market's like a drama queen, one day thrilled, the next in despair. Don't let those mood swings run your strategy. Focus on the long game. Investing isn't about getting rich next week. It's about planting seeds today and letting them grow quietly for years. Patience turns time into your greatest ally. So how can you use this right now? Do your homework. Whether it's a stock, a side hustle, or even a new gadget, research before you buy. Look for value, not hype. Shiny trends fade. Quality lasts. Stay calm when things get messy. Ask yourself, has the value changed or just the price? Think in decades, not days. Your future self will thank you. Here's the personal lesson that stuck with me the most. The best opportunities are usually hiding where no one's looking. When I stopped chasing whatever was trending and started focusing on solid, overlooked investments, my results got better and my stress dropped. And that doesn't just apply to money. In careers, projects, even relationships. The quiet, steady choices often turn out to be the most rewarding. Now I want to hear from you. What's one decision you made that seemed boring at the time, but ended up being a great move? Share it in the comments. I'd love to hear your story. And if this gave you a fresh way to think about investing, hit subscribe, tap the bell, and stick around. There's more no-nonsense, practical money wisdom coming your way. See you in the next one.